Hey guys, what's good? I'm Andre and today I want to walk you guys through the reason why I decided to start buying a LEAPS on PLTR. Obviously with PLTR going through so many changes during the past few months, and then they had the earnings report last week, I decided it's time to commit to a long-term call here. If you guys are watching this video, you probably know what the LEAPS is. If you don't, let me know in the comment section below if you have any questions. I've made a couple of videos on it already, so feel free to check those out. But yeah, let's have a look at the stock, guys, at the charts and everything else, and we can go from there. Cool. So it's pretty easy to see, even for the most newbish of us, that PLTR is clearly at a pretty decent support here in a market where Google, Amazon, Facebook, Apple or Meta, Apple, everybody is 40, 50%, maybe 70% off. We couldn't really expect PLTR to be still in the 15s or 18s, unfortunately, and so we need to kind of do with what we have over here. But that being said, I read their entire transcript for their earnings call that they had last week, so I have a pretty good understanding of the stock right now and where they're at. I think it's a good time to start bottom fishing with PLTR, and I'm gonna show you guys what I did here. So again, the stock is at roughly 7. I've been selling puts for a couple of months now, haven't yet been assigned, but I'm gonna keep at it because I'm generating pretty good revenue there. It's roughly 6% ROI on the selling put side of things, because I'm usually selling around $35 to $40 worth of premium and committing obviously the capital required of $700 to sell a single put. So it's going pretty well. I'm not complaining about it at all. It's pretty good free money to generate. Now let's have a look, guys. Actually, for the LEAPS, what I did was actually after their earnings report, you guys know that the stock fell quite a bit. I thought it was a fantastic time, so I went for it. I bought a long call on January 2025. Yes, 2025. So I went really far out in time, basically the furthest expiration date that I could find, and the biggest delta, so the smallest strike price that I could find as well, at $3, guys. This is how you do the LEAPS. You don't just buy sort of YOLO calls, because it's never gonna work. So for this in particular, I paid $4.99, and then I wrote a call against it to complete sort of the poor man's covered call wheel thingy. I wrote against it an $8 call for the 16th of December at $30, 3 cents times 100 shares, $30. So in total, guys, let's see how much this cost me, and let's see what the scenario looks like for the 16th of December when this should be expiring. Now, obviously, we are capped here in terms of making money. We cannot make more than the difference between what we paid for this spread and then the spread itself, right? So it's gonna be $5 minus $4.69, the total that we can make by the expiration date here. Although this guy is getting a bit confused, I can tell you guys that you cannot make more than roughly 40 bucks on this one trade. But obviously we plan on rolling the short call or closing it if we need to close it, or maybe letting it expire worthless. The stock right now is at 841. This is on a Sunday, so we'll see what happens next week. Obviously we ended last week extremely bullish after some really great CPI reports. But guys, my plan is to roll this call. I do not want to get these shares or this long call called away from me right now. I want to continue selling against it. So what I want to do here is just play pretend with you guys on the long call and see how that looks like. So for the long call, guys, we would have a price per option again of $4.99. I told you this is how much I paid for the long call. It expires probably when I retire or something like that. At least that's how it feels to me right now. So let's look at what this looks like, guys. I've given this a price range of $7 to $20. So we are expecting for the stock to be between $7 and $20 by the time it expires over in January 2025, and we're probably gonna have flying cars and autonomous robots ruling the world. But jokes aside, the plan is going to be to continue selling covered calls on it and to continue whittling down this cost and to collect roughly $20 a month for the entirety of the 2 years. So let's say 24 months times $20, that's $480 that I can generate from selling covered calls. And essentially by the time this expires over in January 2025, it would have cost me only $18 to own this LEAPS. Now I had already sold $30 worth of covered calls on it, so it's $769. So as long as PLTR remains in the 7 range, I can sell calls at $8, so it's gonna be a good scenario for me. But yeah, I plan on making sure that this ends up being near zero or as near as can be. And then from there, let's see what we can generate, guys. It's pretty cool to sort of daydream a bit and see what you could potentially do if the stock really explodes, because if PLTR reaches back to $20, and I mean, it's been there, so it wouldn't be unthinkable for PLTR to be at $20 in 2 years and change, right? But if it were to get back to $20, you would generate $1,200 on this one trade, guys, by expiration. So $1,200, guys, would amount to an incredible 240% ROI on this one trade, without even taking into consideration the fact that you can entirely recover the cost of the call that you bought initially, the $4.99. But without that, you can still generate 240%. So yeah, guys, I mean, to me, it's a bit of a no-brainer. PLTR is just way too beaten down. I think it's a great time to bottom fish here. So that's kind of it, really. Guys, if you have any questions, more than happy to answer them. I will plant 100 trees as soon as we reach 1,000 subscribers on the channel. So please hit the thumbs up, subscribe, let me know if you have questions, and I'm gonna catch you next time. Take care, guys.